This is Commodity Wrap. I'm Tony St. James. Well, on a Wednesday, again, quite a bit of red. Corn market red, soybean, soy meal, bean oil, wheat, at least two of the three exchanges lower, cotton market lower. We saw canola move lower and rice lower. I guess oats managing a little higher close, but man, you really have to look to find something in the green. But our next guest is Brian Hoops, president of Midwest Market Solutions. I guess one bright spot here, Brian, with all of the red, we're not talking about a lot of volume. So even though things were lowered, not a whole lot of action. Is that a good way to kind of sum up the day?
Oh, I think it's a great way to look at it. Yeah, it was very low volume all session long, and just not much in the way of real news to move these markets, and not much really direction in here. It looks like weather is always a factor in the grain markets. Last week it was a little bit wetter conditions knocking producers out of the fields. The market's looking at that 6 to 10 day forecast and looking ahead that we're going to get back into these fields. We're going to probably have some harvest activity, harvest pressure. A lot of producers are still waiting one more day for things to dry up. But once that happens, I think you're going to see basis levels start to weaken. We saw the futures markets down today, kind of anticipating a little bit more activity. But we need that activity to kind of give us an idea of how these yields are coming in. A lot of disappointment in the corn so far. Soybeans, it's variable. I think for the most part, maybe it's a little bit better than expected, but for corn, sure seems like producers are experiencing much poorer yields than what was earlier expected.
Okay, Brian, you mentioned corn, so 12.32 million bushels. That's a number that came out on Wednesday morning. But over 5 days, I have 42.2 million bushels. We're talking export sales. Is that holding the market up at this point, or is it just something that the market says, oh, this is what we need to be seeing either way?
Yeah, it's almost comical that the USDA announces an export sale on Monday, and then 2 days later they halt the brakes on that sale and say they gave us the wrong bushel amount. It was the right country, it was the right commodity, but they had the wrong amount of bushels. They lowered it by about 8,000 metric tons. So not a huge change on bushels, but a small amount. And ironically, the exact same amount sold on Monday that was sold this morning to Mexico. And we saw 3 sales last week. That's going to give us really strong export sales report tomorrow morning. We've seen 3 sales this week out of 3 days. That'll give us very strong exports next week. Our corn export pace there's absolutely nothing wrong with it. We are, the second fastest on record, a very fast pace, and we need to be. We have a huge crop with a lot of acres, a lot of production out here, over 16 billion bushels easily, and we have to have a home for all this crop, and so we're going to feed some of it. We're going to use a lot of it on ethanol demand, but we also are going to need to export some of it.
Well, and here's kind of another question when we're talking about corn, and I know we're not talking livestock yet, but the Mexican border still remains closed. Now, that means we're not bringing Mexican feeders up for use by stockers or by feedlots, especially across the southern part of the country, i.e. Texas, New Mexico, Arizona. But those cattle are still alive and have to be fed. Is it possible that part of our corn sales have been going to Mexico just feeding these feeder cattle?
Well, yeah, I think it's a big possibility and very likelihood that we are feeding a lot of that corn is being fed down into Mexico. So instead of being fed here in the U.S., it's being fed in another country. It shows up as exports instead of feed usage here in our country. So we're probably using almost exact same amount of product. When you look at the bottom line, it's just in one different category than what we would normally see. So We know Mexico is going to buy a lot of corn from us anyway, but it does seem like they're buying more than they normally would, and that's very likely to feed some of these animals.
All right, Brian, hey, let's take a break. We'll come back in a moment. We'll talk livestock markets and some other markets that have seen some movement as well. Again, our special guest is Brian Hoops, President, Midwest Market Solutions. This is Commodity Wrap. This is Commodity Wrap. I'm Tony St. James. Our special guest today, Brian Hoops, President, Midwest Market Solutions. Hey, Brian, for those who don't know what you do and what Midwest Market Solutions does, what can you tell us?
Well, yeah, we've been around almost 25 years now, doing brokerage and marketing services for clients all around the Midwest and across all the country, actually. So we have offices in 5 different states, and hopefully, if you're in one location close to us, you can stop in or not. You can always go to our website, which is MidwestMarketSolutions.com, and see phone numbers and lists of brokers there that we can help you out with. So, yeah, we try and help out a lot of clients on cash sales, re-ownership strategies, hedging protection, everything related to the futures and options markets.
All right, let's talk livestock markets for a moment as well. So, live cattle futures ended the session lower. Feeders, after 4 straight sessions higher in the red, so that's now 2 lower for live cattle, and the first in 5 sessions that feeders have slipped. And even over on the hog side, one day after hitting new contract highs in the October contract, hogs settling lower as well. What are you watching?
Well, yeah, the hog market, we start there. We had contract highs yesterday. We talked about that this morning. We were unable to follow through on that early this morning. I think some profit taking set in. We could not even take out the previous session highs. So we gapped higher yesterday. We're down into that gap area, maybe go fill that gap as we were overbought to begin the trading session. But you're still at holding a big discount to where the cash markets are. Normally, cash weakens this time of year, and the futures had anticipated that the cash markets would come down from this 100, 105 range down into the low 90s, and that did not happen. And so October futures were forced to try and narrow the spread between the cash and the futures, and that's what they've done. They've rallied a good $10. Maybe even more than that, trying to catch up to where the cash markets are. So December is the next market after October. When October goes off the board in about 3 weeks, it's holding that same discount that October was, anticipating the cash is going to work its way lower. And there's, so far, no indication that the demand is going to soften. And you would think demand would be strong as we go into the fall months. Producers may want, or well, I shouldn't say producers, I should say consumers, may want an alternative to beef, and prices as they remain high, they're turning to more pork, turning to more chicken and turkeys, and more families seem to be eating ham during the Thanksgiving time frame than the traditional turkey. So we're seeing good demand for our pork products, and the cattle market, we just have such tight supplies, and demand has been pretty decent through this fall. I think better than a lot of the consumers had believed it would be, but there's still, those concerns are still out there. Slowly increasing inflation, slowly increasing unemployment numbers, credit card delinquencies on the rise. All that tells us that somehow, some way, you have to have some sort of hedging plan, whether it's straight futures or you use options, as risk management is probably really the key here in this cattle market.
Now, I'm going to throw this idea out, and I'll be very, very careful here to say that I'm not a proponent of doing this. I'm just looking. We've got really, really tight beef supplies. Now, we have maybe, could we say, an oversupply on the bean side? There are companies that have come up with plant-based protein options to compete with beef.
Well,
it seems as though they're missing the boat here right now with high beef prices. low bean prices, am I the only one that's kind of looking at, again, I'm not promoting this idea. I'm just saying from a pure business standpoint, would that not make some sense?
If you're looking at pure dollars and cents, this would be the time where you would think those products would be flying off the shelves in favor of beef. I've tried those products. I've accidentally one time, and you knew you were not eating beef. So there's a big difference between the products as far as taste and quality goes, and that I think is a reason why we will not see this type of product really catch on a major scale, other than kind of more of a niche audience.
Yeah. Again, I tried to do a taste test, and I did the Burger King. I did the Impossible Burger King, and then I did the Whopper, and I could tell a little bit of a difference. And again, I'm not promoting that. I'm just saying, if you look at the pure economic side of this, it seems like there could be a market there. But you can't do it if you're higher than the price of ground beef at this point. Right. Anyway, I just throw that out, and yet don't send me hate mail. I'm not saying that's something we ought to promote. I'm just saying look at it from the economic side. I think somebody's missing the boat there. Okay. Yeah, I guess send me the hate mail. Don't send it to Brian, because I worked him into that. But, Brian, if we do want to carry on a conversation with you, how do we find you?
Yeah, my direct phone number is 417-501-5132.
Once again, I'm not promoting the idea. I'm simply saying that I wouldn't be surprised. Brian Hoops is president, Midwest Market Solutions. He may not call me friend anymore after that, but he's a friend of the show. You can also catch him most weekday mornings, 8:15, on Market Day Report on RFD TV. This is Commodity Wrap.